Let's dive into one of the most powerful and honestly kind of counterintuitive ideas in the world of success. It's this concept that a tiny handful of massive wins can completely wipe out a whole sea of failures.
I mean, just think about this for a second. How on earth could you be wrong 99% of the time and still manage to build a billion-dollar fortune? It sounds completely impossible, right? But it's not. In fact, it's the hidden secret behind some of the biggest success stories you've ever heard of. So to really get this, we've got to look at the story of an art dealer named Heinz Berggren. After he fled Nazi Germany, he went on to become truly one of the most legendary art dealers of the entire 20th century.
And get this, by the year 2000, his own personal art collection was worth well over $1 billion. So what was his secret? Was he some kind of psychic who could just spot a masterpiece from across the room?
Well, not quite. His secret was actually pretty simple. He just bought tons and tons of art. You can think of it like he was creating an index fund, but for paintings. He knew most of it wouldn't be anything special, but he also knew he didn't have to be right every single time.
And that right there is the perfect illustration of this idea of tails. A tail is just a rare, super extreme event that ends up having a massive, outsized impact on the final result. For Berggren, most of his collection was, just kind of average. But those few Picassos and Klees he owned, those were the tail. That tiny 1% of his collection was responsible for almost all of his success.
Now, here's where it gets really fascinating. This idea isn't just for art dealers. This whole principle of tails is actually the hidden engine that powers a huge chunk of modern business and innovation. Let's take Walt Disney, for example. If you go back to the mid-1930s, his studio had already cranked out more than 400 different cartoons. They were charming, people liked them.
But here's the thing. Most of them lost a fortune. Yeah, they were creative hits, but financially, they were a total drain. The company was pretty much always teetering on the edge of bankruptcy. And then, 1937 happened. Everything changed with Snow White and the Seven Dwarfs. In just the first 6 months, it pulled in $8 million. Now, to put that into perspective, that's like $170 million in today's money. It was just an absolutely staggering, mind-blowing amount, way more than anything they had ever done before. So, and this is the crucial point, those 83 minutes of film single-handedly paid for everything. It wiped out every single one of the company's debts and even funded the construction of the Burbank studio that we all know today. Just like Berggren's Picassos, Snow White was that one massive tail event that guaranteed the future of the entire Disney empire. This exact same logic drives the entire world of venture capital. I mean, just look at this chart. That huge purple slice, 65% of investments, they just lose money, flat out. Most of the rest barely make anything. But see that tiny little sliver, 0.5%? Those are the tail investments, the ones that return 50 times their money or more. They're the Ubers, the Googles, and they pay for all the failures and generate literally all of the industry's profits.
Now, you might be thinking, okay, sure, but the public stock market is safer, right? More predictable? Well, the data says something a little different. Even if you look at a big, broad index like the Russell 3000, about 40% of all companies in it will effectively fail over time. And get this, nearly all of the market's gains since 1980 came from just the top 7% of companies. Once again, it's the tails that are driving the outcome for everybody.
Okay, so we've seen how this works for huge companies and big-time investors, but this is where it gets really personal, because tails don't just apply to what you buy, they apply to how you behave. And this, my friends, is arguably the most important tail of all.
Just think about it. Most of the time, your day-to-day decisions don't really move the needle all that much. Your long-term success often comes down to how you act during that tiny 1% of the time, those critical moments when the markets are in a free fall and everyone else is completely freaking out.
So let's run a quick thought experiment. Imagine we have 3 investors. First, we've got Sue. She's super steady. She invests the same amount every month, no matter what. Then there's Jim. He gets jumpy during a crisis, sells everything, and only gets back in when the news sounds good again. And finally, there's Tom. He panics late, sells after the market has already dropped a lot, and then waits even longer to buy back in. The results are, well, they're stunning. Sue, just by sticking with her plan and doing nothing dramatic, ends up with almost twice as much money as Jim. Her massive success wasn't because she was some brilliant genius who could time the market. It was all determined by her disciplined behavior during those few terrifying months. She mastered her own behavioral tape.
And this brings us to a really liberating idea. If success is really driven by just a few huge wins, it means we have to start thinking about failure in a totally different way. It kind of gives us the freedom to be wrong.
This quote just nails it perfectly. You can be wrong half the time and still make a fortune. See, it's not about having a perfect batting average. It's about making sure that your wins, whenever they happen, are way, way bigger than your losses.
And maybe the ultimate proof of this entire principle comes from the most famous investor on the planet, Warren Buffett.
The numbers here are just incredible. Over his entire career, he's owned somewhere between 400 and 500 different stocks. But he himself has said that he made almost all of his fortune on just 10 of them. 10! The world's greatest investor is the living, breathing embodiment of this tails you win philosophy.
So, what's the big takeaway here? It's that we need to stop obsessing over avoiding losers. In a world that's driven by tails, most things are not going to be huge winners, and you know what? That's totally okay. The real key is to just survive long enough to catch a few of the big ones, and then have the discipline to let them do their thing. As the legendary George Soros put it, it's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong. That shift in perspective, man, that's a lesson that can change everything.